All righty, we are live. So as you know, the market was just absolutely on fire this week. If we take a look at this heat map from the last 5-day period, these last 5 days, it is looking like a well-manicured, freshly watered lawn with all of that green. And with that said, there are quite a few stocks that saw pretty substantial jumps in share price, but there is one in particular, excuse me, that we are going to be honing in on tonight in this live stream. But before we get that, welcome to another Dividend Happy Hour. Real quick, let me know in the live chat if you guys can see me okay, if you can hear me okay. I'm having a little technical issue, so I just want to make sure that everything is copacetic, everything's kosher, there's no glitches, there's no delays. I want to make sure that the video's coming in as it should and the audio sounds okay. So let me know in the live chat if everything is ship-shape tonight. That really helped me out here. It's the weird thing. If you guys were in the live stream this morning, then you'll know my camera, this camera right here, was not at all working with my laptop. Okay, Ghost Rider says glitching, laggy. Okay. Audio's a bit low. Okay, so there's a little bit of, okay, glitch. Okay, so here's what we're going to do, guys. We're actually going to do this. Let me know if this is better. Does this sound better or look better? Excuse me. Does this look okay? I know it's not very pleasant, but okay. Let me know if this at least is better. Real quick. Okay, that's good. So we're just gonna have to rock with the FaceTime camera. So like I said, I have no idea what's going on, guys. I'm gonna shut this off. Sorry about that. I have no idea what's going on. Let me switch. Bear with me one moment. Got to do that. One sec. Such a bummer. Okay. Okay, one sec, guys. So audio, we're going. Okay, can you guys hear me okay? Does that sound right? Let me know if you can hear me in the live chat. I'm sorry for the technical difficulties. Let me know. And then we'll get on with the show. Just waiting for the green light here. Okay. If you guys sounds better now. Okay. Okay. So I think we're good to go. So like I was saying, guys, and I won't dwell on this too much. Yeah, I have no idea. I updated my computer last night. I hadn't updated it, automatically updated. And now my camera, my main camera that we were just looking at that was causing that lag, it wouldn't connect to the computer. It's like it wouldn't show the connection there. It's weird. It was just for this platform, this streaming platform. There's just this Zoom stuff like that. It just was not coming in. And so I tried plugging it into my desktop, which is what was causing the lag. So I have no idea what's going on. I have no idea. But anyway, guys, where were we? Let's kick it off. Why don't we kick it off with a quick cheers? Okay. And I got a little margarita tonight, so I came prepared. But why don't we kick it off my goodness gracious. Why don't we give a toast to one of the best weeks on the market that we've had in a long time? I don't know about you guys, but my portfolio right now is sitting at all-time highs. And I think that's definitely worth celebrating. I'm sure a lot of you guys are the same way. So let's cheers to a good week. Let's see what the next one brings. It is, it's always a roller coaster on the market. So cheers to that. And also here's to you guys. Thank you for tuning in and putting up with the technical difficulties tonight. That's the thing about these live streams. You never know what's going to happen. But let me know a few things here in the live chat, guys. Number one, what are you sipping on tonight in the Dividend Happy Hour? What did you bring to drink? Number two, what did you buy this week? What did you pick up in your portfolio? And also number three, did anything cool happen in your portfolio? Any milestones? Did you guys, hit any new income goals, any new market portfolio value goals, anything like that? Let me know that in the live chat or let me know in the comments below if you are watching the replay. I'm curious to know. And let me go through and just give some shout outs real quick to all you guys here who are tuning in. It looks like there's just a few individuals short of 100 in the stream tonight. And I'm so sorry. This looks like, I just have no idea what's going on. It's honestly, I spent about 4 hours today trying to figure it out and made no progress. So, let's see. So I see Thomas, I see Suzuki Man, Pat, Raheem, Norman, Luis, Miguel, Eddie, Mitchell, Kitty Cat Art. Okay. We got Ghost Rider, Anthony, Joyce, Lulian, Scott. What's going on? We've got Adon. Hey, Adon. Andy. Okay. Arjun. What's going on, Arjun? We've got Anthony, Ricardo, Tim, Big Tim, Timbo. We got Eddie in the building. We've got Michael, Chris. Did I already say what's up to Ghost Rider? I think I did. Excuse me. Siri. All right. Sorry, guys. Norman, what's going on? Fabio, it is going to be a night, guys. Buckle up. Charles, what's happening? Ricardo, my man Leroy Skywalker's here. Let's see. Yeah, Coach Tim says it might sound even better if you hit that like button. Guys, hit that thumbs up if you haven't done so already. And Adon, where's your margarita? Like I said, I got it right here. I had to pour one out for you guys tonight. I told the streaming group this morning. I told everyone in the morning stream that I'd have a margarita if they showed up. So I didn't want to break that promise. And it's not even like a margarita. It's, I mean, as you can tell, looks more like motor oil, but it's just like a little reposado with some Coke Zero. So it's quite the cocktail, but it tastes pretty good. So, we're going to go with it. I see Jim here who picked up some Walmart, CNHI, which I'm not familiar with, LYB and MFC. Very nice. Paolo's here. My man B Still in the building. Fabio. Okay, Luis says update the camera. I'll give that a shot. It's interesting though, Luis. So I actually don't even want to get into it. There's one thing that I can do. If I plug it into my laptop, it'll show that the camera's connected. But when I open up Google Chrome or when I try and do like Zoom, for example, then it won't show the camera. So I honestly have no idea what's going on. I talked to Sony, I talked to Apple, I talked to StreamYard, which is the platform that I use for streaming. No one had a solution. I reinstalled my operating system on my computer. I have no idea what's going on. Paolo says, how is F1 there, Ryan? I don't know. I'm staying away from the strip. Last night, I guess there was some issues. One of the cars really got like beat up because I think there was a manhole cover that was not intact. So that kind of messed things up. So, it's off to an interesting start. Be Still. Yeah. Did Peanut break the camera? No, honestly, you know what I think it is? I think it has something to do with, and I'm not 100%, but I'm just guessing because the issue the issue happened this morning. Yesterday was totally fine. And the issue appeared after my laptop updated software. So I think it has something to do with that. That's the only thing I could think of. So I have no idea. Oh, we got Arjun says, first time live from India. Let's go. Elbow cough. Nice. Well, I'm honored to have you tuning in all the way from India, Arjun. That's great. Oh, this is fantastic. Look at this, guys. Luis says, I passed 150K this week for the very first time. Dude, that's a huge milestone. Congratulations. That's great. Let's see. My man, Danley the Manly says, F yeah, brother. This is what investing is all about. Yeah, there you go. There you go, man. It's kind of like, because we had our kind of a rough period on the market not too long before this week. You know what I mean? And the way I think about it is it's kind of like a bow and arrow that you're pulling back. You're pulling back the bow. You're creating that potential energy when you're buying those stocks on the low, when you're buying Realty Income under 50, when you're buying, what's another example? When you're buying, I guess I didn't do this, but some of you guys did. When you're buying Intel in the low 30s or upper 20s, it's just like you're pulling that back, and then the market pops off. You let that bow go, and whoof, things just, you're really shooting for the stars at that point. Let's see here. Let's keep going here. I see Greg all the way from New Zealand. New Zealand. Very nice. What else we got here? Andy's sipping on a tall, cool glass of wine. I like to see that. Michael is always sipping on a Bush, buying SCHY. Good stuff. Oh, this is cool too. Wing Addiction. Congratulations. Crossed 25K in the portfolio last week. That's fantastic. And Joyce also had a new record high in the portfolio. That's great to see. Greg says December and January will be my first double-digit dividend months. That's fantastic. Great job. Wes here says drinking some coffee, Bought Main Street, SCHD, and Kimberly-Clark. Good stuff. Okay, air to the Ron to the air, boop to the bot to the bang. Who sings that? Who says that? I think that's the line. Let go of Main Street, Verizon, and Blue Owl Capital Corporation, and allocated that to Lowe's and Tractor Supply Company. Okay, very nice. Anthony says, hit over $1,000 in my portfolio, 1,000 currently. Next goal is 10K. Good stuff, my friend. First 4 figures. Love it. There we go. Ghost Riders knocking on the door, knocking at the door of $250 a month in dividends. Love it. Great. Oh, we got Hunter here for the first time in a long time. First live I've caught in a while. Good to see you, my friend. Thank you for tuning in. I'm sorry that you tuned in on a night where we're having these issues, but you know, as long as the sound's okay, I think that's more important than the you know, the video. I mean, this sucks. I really don't like this, and it's bothering me. It really is bothering me that it's not working. But you know, I tried. There's just nothing I can do at this point. Hopefully, it sorts itself out. So let's keep going here. Oh, there we go. Mike D drinking a tall, cool glass of leche and made it to 800 shares of SCHD. That's very impressive. Good job. Hunter started some new positions in Costco and Microsoft in the Roth. Willie, big Willie style. What's up, Ryan? What's going on, Willie? Good to see you tonight, my friend. Let's see. Joyce had a nice little shopping spree. SCHD, ABR, Altria, and JEPQ, and a couple more. I don't even remember what I bought this week. I think I bought some J&J. I think that's what I picked up. I'm pretty sure J&J. I had a really strong week at dividends too. I don't know about you guys. Crazy week at dividends. And I actually listed, there's a link to my most recent newsletter article that just came out yesterday morning, where I show my purchases. I show all the dividend income I received this week. But it was like, I think it was like close to $130 just this week. So really good stuff. Let's keep going here. We'll go through a couple more, get caught up in the chat, and then we'll get into the main event. And for those of you guys who are just now kind of hopping into the stream, we're talking about a certain high growth dividend stock. It's one that I have in my portfolio that is it just can't be beat. This stock is like, I don't know. It's just, as they say, it is going to the moon. This, and I hate saying that, but it's true. I don't know how else to word it. This stock just is on fire. So we're going to talk about it. They reported earnings yesterday. And yeah, I'm excited to chat with you guys. It's been an interesting one to hold so far. Scott here says, Dr. Pepper, 8 years sober. Congratulations. That's huge. Cross 10K in annual dividends. Wow. Bought Realty Income, Blue Owl, Aries with profits from Google. Good stuff. That's a huge boost in dividend income for you, my friend. Good stuff. Let's keep going here. Like I said, a couple more. We got Sharon here. Good morning. Drinking some coffee, picked up some URNM and NDIA, India Nifty 50. Okay, I was going to say I've never heard of those, but good stuff. Very nice. Let's see. Adon says milestone this week. I'm within $1 of making 2K in year-to-date dividend income. Dude, that's huge. I'm not too far behind you. I'm like literally $2 away. So we are neck and neck. Let's keep going. One or two more. We got Eddie for the first time joining the group. Eddie, happy to see you here tonight, my friend. Thank you so much. Yeah, okay, that's good to know. Jim says you're the only one that's bothered by the video. It's fine, really. Well, thank you, Jim. I appreciate you saying that. But you know, more than anything, what it is, it's that the issue came out of nowhere, and there doesn't seem to be any solution. That's what's frustrating about it. But it's out of my hands. Like it's something I, you know. Like I said, I spent 4 hours this morning, four freaking hours trying to figure this out and couldn't do it. So it's just, you know, at some point you just got to move on, I suppose. But, and you know, I want this stream to be the best it can be. So that's another reason why it's frustrating, you know? So anyway, how about we get into it, guys? How about we get into the main event? Before we do you guys have any guesses as to which stock we're talking about tonight? I'm curious if you guys can guess it out there. I'm sure some of you can, but let me know in the live chat real quick or in the comments below if you are watching the replay. Let me know which stock you think we're talking about. I think you guys are pretty smart. It's hard to get anything past you guys. So let me know what your thoughts are in the live chat real quick. Let's see. I see some really good guesses. Okay. I see a lot of Williams-Sonoma. I see some Broadcom. I see MPW, Snap-on, that's another really good guess. Starbucks, great guess. Williams-Sonoma, Lowe's, really good guess. Target, great guess. MPW, yeah, that was good. Miguel says, Snap-on, AbbVie, yeah, AbbVie I haven't talked about for a long time. VFC, man, that stock has just been that stock has been the opposite of on fire. Actually, they did have a nice day, one nice day I think this week. Norman says defrag your hard drive. I don't know if it's a hard drive issue. I don't know. It'll I don't know. I'll figure it out. Worst case scenario, we just do this for the time being. Let's see, Gendry, MPW 800 shares more, double down. Okay, well, guys, this stock we are talking about, I see KRC, that's another good guess. The stock we are talking about is going to be Williams-Sonoma. Okay, so those of you guys, like I said, a lot of you guys guessed that one. It's hard to get anything by you guys, but Williams-Sonoma right here. And let me know too, I'm viewing this on Seeking Alpha over on my desktop. So if there's any lag here or anything's wonky, just let me know. But as you can see, guys, look at that 5-day performance for Williams-Sonoma. Pretty incredible, up over 21% just in the last week. Can you believe that? That's an insane jump. And then in the last month, they are up, looks like 10%. So they had a little bit of a dip at some point this month. They went from, looks like they started about 162. Okay, then they dropped to, it looked like it was doom and gloom for a little bit with Williams-Sonoma. They dropped down to the low 140s before this big boom happened and that arrow was let go and that bow was let go and that arrow shot it all the way up to about $180 per share. And we saw it hit that, right? A little bit earlier today. It was 181, just over 181. But anyway, year to date, Williams-Sonoma is up 56.8%. 56.8%. So that's unreal. And while this company has climbed as a result of some of the macro stuff that's pushing up the rest of the market, namely a lot of people thinking that the Fed could be done raising interest rates. We saw month over month inflation was flat. Year over year was at 3.2%. So that's really what kicked off on a macro level. That's what kicked off this huge boom in the market. And so Williams-Sonoma was a beneficiary of that. But also this company yesterday reported their quarterly earnings. And we can see if we pull that up right here, okay? They beat on the bottom line. So non-GAAP earnings per share of 366, beat by 32 cents. So that's looking good. But the revenue was down over 15% year over year. And it missed estimates by $90 million. But nonetheless, guys, on this news, if we go back over here, according to this, yesterday, Williams-Sonoma jumped up 6%. And I think by the end of the day, it was up even more. I don't quite remember. But anyway, it had a very substantial gain. This says on Q3 bottom line. Now, what happened was Williams-Sonoma, as we saw, they missed on the top line. They beat on the bottom line, but they reported record high operating margin, I think of 17%. I listened to the earnings call earlier today, and took some notes. But 17% operating margin, that was the third quarter record for them. So the market responded really well to this news. And furthermore, if we look at Williams-Sonoma now, just that one metric, that operating margin now compared to, which by the way, as you move down the income statement, you've got revenue, gross profit, you've got your operating profit, and you can go all the way down to net income. So we're kind of going down the income statement here towards the bottom line. And 4 years ago, pre-pandemic, Williams-Sonoma's operating margin was more like 7%. So over these last 4 years, yes, year over year, revenue's down. And unfortunately, across all of their different brands, Pottery Barn, West Elm, Rejuvenation, Mark and Graham, I said Pottery Barn already, even the namesake brand, Williams-Sonoma, and they own all these different brands under their umbrella. Comp sales were down year over year by, I think, close to 15%. Overall sales were down 15.5%. Comp sales down 14.8%. That's not great news. But still, if we look at the 4-year period, pre-pandemic to now, that same number is still up about 35%. So the sales today are still quite a bit higher than they were pre-pandemic. And the operating margin, which is what I was trying to stick to, has gone from about 7% in that period 4 years ago to now 17% now. So as time goes on, this company is becoming more and more profitable, and that's what you want to see. So the market responded really well to this news, this earnings news from Williams-Sonoma, despite the miss on the top line. And I took some notes on this. Like I said, guys, I listened to the earnings call. I took some notes. Let me show you guys this. If we go over here, we're going to, bear with me one moment. where are we? We're going to go over to my dividend database here, and you can see this is what I used to do all my earnings call notes. So you can see I took quite a few notes, but here's my main takeaway. I'll just read this to you guys here. What I like to do with this too, this is a new habit that I've kind of started doing, is I'll go through the call, I'll listen to it, take whatever notes, anything that jumps out to me, I'll write it down. And then at the very end, I kind of like to summarize it. I'm going to hide this for a moment. I kind of like to summarize it in just a few sentences, maybe a paragraph or so. And let me, oops, bear with me. Sorry. I'm in the ring of fire over here, as my brother would say. So let me just read this to you guys. This is my overall takeaway for the quarter. Williams-Sonoma reported a challenging quarter with a year-over-year revenue comp decline of 14.6%. We talked about that. Primarily attributed to customer hesitancy in high-ticket furniture. So they're not selling as many couches. They're not selling as many dressers, bed frames, stuff like that. However, because they have all this other stuff going on, a diverse brand portfolio, in-house design, and vertically integrated supply chain, these are highlighted as key strengths for management. They touched on this a lot, and this allowed them to offset the furniture declines with strong performance in all these other things: kitchenware, textiles, dorm, Pottery Barn dorm, Pottery Barn teen, Pottery Barn kids, and other seasonal offerings. As we head into the holiday season, it's going to start looking really good for Williams-Sonoma. They'll be a beneficiary of the time of year for sure. Anyway, this is an interesting part. The CEO emphasized a commitment to avoiding reliance on promotions for long-term success. And I can't tell you guys, I can't even begin to tell you how many times this was brought up in the call. They are very adamantly against relying on promotions and deals and discounts to drive sales. Like I said, I seriously can't tell you how many times it was brought up in the call. And that's not to say they don't do it. They do have some, but in comparison to a lot of their other competitors, it's a lot to a lot lesser degree, if that makes sense. And the reason being, the CEO, she had a really good quote on it when asked about it in the Q&A segment, is because in the short term, it might drive sales, but from a long-term perspective, it really dilutes the brand and it really gets the customer accustomed to waiting for lower prices. If they know that a deal is going to be around the corner, they'll wait to buy something until they see a deal. And so Williams-Sonoma doesn't want to rely on that. And like I said, the CEO had a really interesting quote on the matter. I'll read it to you real quick because I wrote it down right here at the end of my notes. She said, for sure, it's not good for the long term. And you can see the race to the bottom with promotions if you look at the history of retailers who've done that. It's a bad idea. And we are not a low price provider. We are a high quality, high service, high design retailer. And so pricing is not usually why you come to us. You want the price to be great for the value and the design. But our quality is so much higher, we're not willing to sacrifice in the short term or long term to sustain a promotional strategy. So I really like that. I think it points to their emphasis on the long term and not taking shortcuts to drive sales in the short term. That's something that I really respect. One sec. Do that right there. But anyway, going back to my takeaways here. Despite the tough environment, the company raised their full-year operating margin outlook, emphasizing the importance of maintaining value and design over short-term promotional strategy. So that's the earnings in a nutshell. You know, although sales were down, there's a lot of other good stuff to come out of that. And I think the long-term thesis for Williams-Sonoma is still intact, despite maybe more softening for the consumer in the short term. So that made me feel good. And overall, I thought it was a really good call. And, it's also not surprising, in addition to the macro stuff, with that said, to see this company jumping up so much. And, it's a very bittersweet thing. Obviously, we talk about this quite a bit. Because especially for this particular stock, because this is the newest addition to my portfolio, I started buying it. If we go back over to the screen here, I started buying this stock back in June. Okay, we can see my first purchase was June 13th, 128. I bought it at $128, and then I've kind of been buying it, or kind of was buying it from June for like a 2-month stretch there, mid-June to mid-August, and that leaves me with a total of 18 shares. If we go over here, I'll show you my position real quick. We can see, exactly 18 shares with an average cost of $133.08. And it's funny too. I remember, and you guys probably will remember this too, because it was, we talked about it in videos and whatnot. I remember it being $125, $130 and kind of stressing about it, because at that point it had just run up from 114 to 114, 115, kind of in the teens there, to when I started buying 128, 130 in that range. And I remember talking about it and thinking about my gosh, did I miss my chance? Is Williams-Sonoma overvalued? Is the discount gone? Did I screw it up? Did I make a wrong decision? And lo and behold, it ended up working out just fine. But with that said, because it has run up such a substantial amount, it begs the question, is Williams-Sonoma at its current price, even though it's run up so much, is it still a good time to buy this company? Is it still at a decent value? And I don't know, like if we going back over to the screen here, if we look at a couple of valuation metrics here, we're going to look at a couple, not metrics, couple intrinsic value calculations, one from Alpha Spread, one from Morningstar. Now, Alpha Spread has it at 155.68 for the base case, kind of middle of the road. Their best case was just above $200 a share, I think closer to where Morningstar has their fair value of 205. Now, if we average these two numbers together, we're going to get a fair price of $180.34, which is really not too far off from where the share price is right now. It's just a couple bucks below that. It's about $179. So it's about, according to this, it'd be about fair value. Now, there's probably going to be some different opinions on that. That's fine. Everyone does this calculation a little bit differently. I like to look at these two, compare and contrast these two different sources of valuation, as well as doing my own intrinsic value calculation here and there. And personally with Williams-Sonoma, I mean, if we go look at my position real quick, excuse me, guys, I'm all over the place. If we go look at my position real quick, so right now I'm up about 34%. Okay. So because of that, I'm not adding any more at the current price. It's run up quite a bit above my average cost. And there's, as you guys can see, there's some other stocks I'm currently, down in the red on that I can lower my average costs with. So I'm going to prioritize those. But once again, it's just funny to look back and remember that I was stressing about buying it at this price and seeing where it's at today. And the market is just, you just never know what's going to happen on the market. It is such a mystery. It is such an adventure all the time. But with that, guys, I want to put it back on you. And I want to ask you guys, which stock in your portfolio has seen the biggest gain this week? Which of yours has had the greatest run up? I want to know. So let me know in the live chat. Also, let me know in the comments below if you're watching the replay. Boom. Okay, let me go through the chat. I think I missed some stuff here. Oh, is Shamir here? Oh, he's here. Shamir. Man, I was worried about you, man. I was wondering where you went. I hope you're doing okay. It's good to see you. What a surprise. Honestly, Shamir, that made my night. I'm happy to see you, man. Yeah, Teresa says, so I think Williams-Sonoma will still cut prices on holiday items once the holidays passed. Yeah, and that's something the CEO touched on as well. She said, let me see if I can actually find it real quick. Let's go over to the transcript. I'm pretty sure I know right where it is because it was one of the last things they talked about. So let's go back over to the screen. We're going to go here to Williams-Sonoma, go look at the transcript. Scroll all the way down to the bottom. And let's see. Okay, here we go. So she was asked, the CEO, Laura Alber, was asked, I guess the question I'm asking is, as you're communicating with your customers, and has there been a shift in marketing shifts otherwise that you are saying to your customers, look, we have great brands, these are high quality, and you should not expect promotions from us? Like basically asking her, do you tell your customers not to expect promotions? And she says, there's still plenty of things on sale because we clear products. To your point there, Teresa, like holiday items, once the holiday is passed is a good example. They'll run promotions on that just to clear inventory. But on, normally it's something that they don't make a huge part of their sales strategy. So you can find, if you're a promotional shopper, you can find sale prices on our website for sure. So let's not pretend we don't have any. It's just that the quantity of those is so much lower than it has been. It's so much lower than our competitors. I don't like to name people by name. We've scrubbed everybody's website and look at them. They're littered with discounts. I mean, in some cases, it's 80% red line, 100% red line of some really good names out there. And I don't know what they're doing, but I can tell you what the customer sees. And I don't know when they're going to go back to regular price or if this is a new strategy, but this is what's going on in the marketplace. And it's very important to us that the customer can count on the price. Because if you buy a piece of furniture, it's not likely delivered for 4 to 5 weeks. That price changes and it hasn't even been delivered. You're always going to wait until you get the sale and you just create this up and down curve of customers waiting for sale. It's not a good cycle. And so imagine, like, if you're a customer of Williams-Sonoma, you buy a couch, it takes a few weeks to get there. In that time period, if you're buying it, if you don't buy it on a promotion and there's one right around the corner, let's say you buy a couch, I'm just going to throw out a random number. Let's say you buy a couch for $2,500 from Williams-Sonoma, just random number. Okay. And then, a week or two after you buy it, you go back to the site and you see that same couch is now at a 40% discount. So 2,500, 40%. I don't know what the math is off the top of my head, but it's quite a bit lower than where you bought it. And so as a customer, that's probably not going to make you very happy. You'll probably be pretty bummed. And then the next time you go to buy a couch, or you go to buy whatever, knowing that you missed that opportunity last time, you might wait. You might wait until there is a discount because you've been conditioned to wait for that. And so they don't want to do that. They think their product is worth more than that. They think their product is a higher value, a higher quality that they don't have to rely, at least from a long-term perspective. They don't want to rely on sales or on promotions to drive sales. They want, I guess, the quality of the product to speak for itself and that be the selling point. Hopefully that makes sense. And I'm kind of thinking out loud with some of this stuff too, trying to think through it as I'm absorbing it. So anyway, I want to check out you guys. So your guys' top performers. Let's see. Gruder says sold my remaining Intel today. That one. So that's been my best performer this year. I think it's up 65% year to date or something like that. Crazy. And I'm less than $30 away from breaking even. It's right there, and I'll probably sell out of it too when that happens. Charles says Intel. Yep. Bank of America, Target, and maybe that's Intel. Maybe yeah, I'm guessing that's Intel. Rio Tinto. AMT is on fire. Yep. Wow. Tortoise, 110%. It's been extra space, up over 25% since their earnings around 2 weeks ago. Kitty Cat. What's that from, guys? Call me Kitty Cat. What movie is that? Let me know. Target. I'll give you another hint. Wow. Unreal. Let me know. Fabio says Qualcomm. Okay, we got AMT, Stanley Black & Decker starting to gain some traction, but yeah, okay. Yeah, Target definitely jumped after earnings. That was interesting to see. Joe says Berkshire, good stuff. Pat Embridge. Oscar says Amgen and US Bank had gains, yeah. AMT hit 200. Let's see. UPS for Chris here. Michael says Starbucks. There you go. Love the Bucks. Yeah, Duroc says US Bank. Tyler, what do you think about Broadcom? I'm up 95%. Should I sell? Bought at 500. I haven't looked at Broadcom for a while, but it's a pretty solid semiconductor company. I know it's been historically been a really solid dividend grower as well. So I don't know. I don't know if you should sell or not. If you think it's a good company and you think it's got some great long-term prospects, then I wouldn't sell. I think I was actually listening to a podcast. I don't know if any of you guys listen to the Dividend Mailbox podcast. If not, I highly recommend it. Greg Detweiler, really, really good listen. Listen to it on 2x speed. If you do, you'll see why. But I highly recommend that podcast. But right before I started streaming, I was listening to an episode of that, and he kind of talked about this. Like, actually, he used Williams-Sonoma as an example. So, and bear with me as I try and explain this. So he was saying something like kind of the same question. I'm up 95%. In his case, I think it was up. He had Williams-Sonoma, bought it a year or so ago. He's up 40% or something like that. And thought, should I sell? I bought it at X dollars. It's now, when he recorded the podcast, it was a 150. So he's up even more now. Should I sell and lock in this 40% gain or this 50% gain, whatever it is? And he said, he compared it to like a siren song where you're tempted to do this thing. And the thought of locking in these gains is so tempting that it might drive you insane thinking about it, wondering, well, should I sell? Should I not? Should I lock in some gains? Should I not? And what he pointed out was, if you believe in the business, if you think it's going to look better than 10 years from now than it does today, then you might be okay selling for a 95% profit today or 50% profit today. But once again, if you think the future for the business and the prospects for the business 10 years down the road, 15 years down the road are going to be better than they are today. If you think it'll look like be a better company, then, in the grand scheme of things, a 40% gain, a 50% gain, a 95% gain might be nothing compared to what you will ultimately end up receiving if you held on to it for that period of time. And so I guess in other words, selling, depending on what you think of the business from a long-term perspective, selling today for a 90%, 95% profit, but you might be selling yourself short. And you might be making a short-term decision instead of one that will ultimately leave you in a better spot in the long term if you didn't do anything at all. And maybe I didn't do justice explaining that, but I hope that made sense. Let's see. Let's keep going here. Buyer Powered said, funny, my biggest gainer this week is one of your old holdings. Good old Virgin Galactic. What did it do? I haven't seen it. Let me see if I can jump over here. SPCE. Bear with me one sec, guys. So Virgin Galactic, it's up 5% today. It's up almost 30% just in the last month, 23% just in the last week. Wow, good stuff. But what's it do? It's still down 40% year to date. So dun, dun, dun. There we go. Good guess, Tyler. Wedding Crashers. Would that make you love me? Love, one of my favorite movies. Yeah, Leroy, Wedding Crashers. You know it. You know it. Here's a good question. Wes says, is it better to spread my money evenly on stocks I have or focus on companies where I can lower my cost basis? This is a tough question to answer. I think dollar cost averaging blindly without paying much attention to valuation or share prices, I don't think that's a bad move. I think it's a really, really easy thing to do. And, why not? Sometimes it's better not to overcomplicate it. So I don't think that's a bad strategy, just buying the same things in the same set amount every single week. And over a long period of time, it'll work out. But on the other hand, focusing on companies where you can lower your cost basis, yeah, that's an opportunity to better your position with those particular holdings. And that's not a bad thing either, especially if you believe in, especially if you believe in the long-term prospects of the business. If you think that business will look better 10 years down the road or 20 years down the road, and you're okay holding it for that duration, then where it's at today is, a good buying opportunity and maybe one worth taking advantage of. Let's keep going here. B still says, I like when Ryan wow, does impersonations. Well, what else? Yeah, I got quite a few impersonations. They'll come out eventually. All of them will, but yeah, it's fun. Jim says, I like to use stop loss to lock in gains before selling. Did that with Broadcom, VLO, and Mesa. Did you mean Meta, perhaps, or Mess? What is Mesa? Mesa. Let's see. Mesa Air Group. What is that? Let's see. Let's go here, guys. One sec. Here we go. Down 50%. This for Mesa Airlines that provides regional air carrier scheduled passenger services under American Airlines. Okay. Interesting. Wow. Look at that. Sales are on the down and out. They pay a dividend? It doesn't seem like a company that pays a dividend. Yeah. Okay. There we go. Yep. There we go. This is a good one. Drink on impersonations. Yeah. CA says, what are your thoughts on HPQ? I haven't looked at HPQ for a long time, but I remember last time just the financials I remember looked pretty solid. And let's take a spin over there and see what's going on with HPQ. But yeah, I remember kind of liking it when I last looked at it. And I used to talk about it a lot more than I currently do on the channel. But now I guess looking at it again, sales are pretty dang flat across these last 10 years. If we just pull up this chart, guy, that's not super inspiring. I think the gross profit margins, yeah, that's kind of diminishing as well. We see here. I mean, if at best it's flat, at worst it's diminishing. I'd call it flat overall. Operating income at least has been pretty flat, pretty consistent. So I look at this right now and I don't see a lot that really excites me about this. I mean, revenue per share is going up if you look at it from that perspective, but that's just because they're buying back so many shares, which is good to see. And the dividend growth for this company has been really solid, and they do have a low payout ratio. So the dividend doesn't seem to be in danger of being cut, but it also doesn't seem like a company that's going to deliver a lot of growth or returns, I would imagine, at least on a total return basis. Just I think it'll have a hard time going back over here. I think it'll have a hard time growing its share price if the earnings aren't really growing. So I think you'd want to see that. And let's just compare that to something like a Williams-Sonoma, for example. I know totally different businesses, but immediately you'll notice the difference in revenue chart here. A lot more growth from a company like this. And I do believe the gross profit margins were better. What were they with HPQ? They were 20%. And here the margins are expanding over time. We go from 38, not by much, right? But upper 30s to, and even as low as like the mid 30s up into the mid 40s at most. So I think that's looking a lot better. And if you scroll down to the bottom here, looking at the earnings per share, some years it's flat, but it's really, really taken off these last few years. So the pandemic was pretty good to Williams-Sonoma. And I think the big question mark with this company is, can they keep that going? And kind of like what we were talking about earlier, just comparing their numbers now to where it was pre-pandemic. I mean, we're a couple years removed from that now, and it looks like they're holding strong. So I think that's pretty good. And they're also buying back shares, so that looks good. The dividend growth, once again, with this company is very substantial. And my favorite part about it, if we go over to the balance sheet, no debt, baby. If we scroll down, look at this, guys. Well, actually, they do have a little bit now, it looks like, but not much at all on a net basis. I mean, on 0.4 billion, but on a net basis, it's really not bad. Prior to 2020, they were negative on a net basis, and it's kind of starting to head back that way. It'd be nice to see that get back under negative territory. But I think, I was looking at not the 10Q, but just the press release, and I'm wondering if maybe, I don't even know if, let me see here, long-term. So I don't even think they have debt, unless I think it's just leases. I think that's what they're counting as the debt, is just these lease obligations. I could have that wrong, but if we look here, current portion of long-term debt. So current debt, none as of last report. Long-term debt, none. So capital leases 1.16 billion, with a little bit of current lease obligations. So I think that's where the debt's coming from here on Seeking Alpha. I could be wrong on that, but that's kind of my interpretation. Let's see here. Let's keep going. There we go. Trying to Wear says, I'm on a streak. Caught you yesterday once and today twice on the stream. Let's go. Well, yeah, thank you for tuning in, man. I hope you don't get sick of these streams yet. And by the way, if you guys haven't been tuning in at all to the morning streams, check them out. I'm doing it for the entire month of November, Monday through Friday, 7 a.m. Pacific time, 10 a.m. Eastern time. Basically going live 30 minutes after the stock market opens. And I told myself I'm going to do this for the entire month of November and just kind of go from there. I still don't know if I'll go. I still don't know if I'll continue it past November or not. I'm not going to commit either way. I'm having fun with it so far, but I will admit it's kind of a lot of work. And I think with this thing too, guys, like, I just don't know. I don't know. I got to get that figured out though. I do know that. Let's see. Yeah. So Uncle Warren sold some HPQ stock. It's a hot topic after Buffett sold shares. These shares sales happened last week and cover roughly 4.8 million shares. Okay. But still holds a 10% stake. Okay, this is a good question. So Emil says, under which condition do you sell stocks? If they're down by a lot, Which criteria need to be met for you to sell a stock? That's a good question. And it's the answer to that is something that's evolving over time. I'm learning. But I just put out a video, for example, I put out a video Wednesday talking about 4 stocks in my portfolio that I wouldn't mind selling out of. And they're all for different reasons, but I'll just give you an example. So one of those examples is Intel. And I kind of made a similar reasoning for AT&T and Verizon, but as I'm getting more experience with this stuff, I guess I'm starting to understand just the nuances of different industries a little bit more. And when it comes to something like Intel, I look at that now and I think, this is a business that constantly, it's a very capital intensive business. It constantly has to reinvent itself. It constantly has to spend money on research and development and pushing the envelope. And in other words, it's a business that constantly has to change and stay up to date on the latest technologies. And that requires a lot of money. That requires a lot of brain power. And it's a pretty cutthroat type of business to be in, it seems like. And, I just don't know. I look at that and I think, there's a lot that can go wrong with that. And we've seen that with Intel. You take your foot off the gas for a year or a couple years and you find yourself in a really bad position that you have to, in Intel's case, have to initiate this huge turnaround to dig yourself out of. And I think they're doing a good job of it so far, by the way. But I look at that and I think, I just don't know if I want to be in something like that forever. And I compare that to some other stocks in my portfolio and some other stocks that I'm looking at. And I think, there's businesses out there that don't require as much change, that don't require that don't have that sort of aspect to it. And I think it'd be easier and more simple to invest in something like that. And so when thinking about that and just kind of reflecting on some of the companies in my portfolio using that lens and that kind of way of thinking, it's prompted me to want to sell out of Intel, and I haven't done it yet, but I'm going to. Intel and a couple other ones like AT&T and Verizon. And so that's one reason I'd sell. And outside of that, I think that's kind of a big thing, at least for me right now. I used to think too, like if a company cut its dividend, without question, I'd remove it. And if a company completely eliminated its dividend, I probably would. I probably would remove it. But I've had like Intel's an example. I've had companies cut their dividend. WP Carey is another one that will be reducing their dividend post spinoff. AT&T, the same thing happened, and I've held through all of those. And so I guess another thing to add to this is one thing I've learned that it's really not so black and white. A lot of things are not black and white when it comes to investing. And there's tons of different reasons why you may want to sell a stock. And those are just a couple that I've experienced so far. So, and I'm sure as time goes on, I'll come up with other reasons to sell as they happen. But yeah, for now, that's kind of where I'm at with the whole thing. Let's see here. That was a really good question. Thank you for asking. And by the way, guys, we've got about 12 minutes or so left in the stream. We're going to wrap it up then in about, like I said, 10, 12 minutes. And yeah, little time check there. But if you guys haven't done so already, and if you're enjoying the stream, it'd be a huge favor if you hit that thumbs up button if you have the capacity to do so. Just lets me know I'm doing a good job, lets me know that you're enjoying the Dividend Happy Hour. And as a thank you for that, an anticipatory thank you, take a swig. Let's see. Let's keep going, though. Like I said, we've got about 10 minutes. We're going to make the most of it here. Let's see. James says, hi, Ryan. I love your videos and working on that cash flow. Love it. Got to collect that cash flow. I have a very diversified, smallest portfolio consisting of 61 holdings. Wow. 49 individual stocks and 12 ETFs. What are your thoughts? Well, what's smallish? I mean, what's that portfolio value if you don't mind me asking? But that aside, I at a glance, and I like I said, I've not seen your portfolio. I don't know. But at a glance, I know for me personally, that'd be too much. I think in reality, let's say that you just have an ETF portfolio. You're not owning any individual stocks. You're just going with ETFs. Man, I think you get by with just two. I think you could have two different funds and call it good. You know, I think if you have 12 ETFs, unless they're all different sector ETFs, I'm sure there's a lot of overlap between the holdings of those funds. And if that's true, if that's the case, then it adds a bit of redundancy into the holdings that you own. And so I just don't, it's probably an unnecessary amount of ETFs to hold, but also when you work in 61 different stocks on top of that, that's probably even, I don't want to call it overkill, but it's a lot. So, but that's just my take. Everyone does things differently. Having said that, I don't know if there's a right or a wrong answer here. If it works for you, it works for you. But I know speaking personally, that's not an amount of positions that I'd want to hold. I'm actually going to screenshot. I'm going to screenshot this question because I think that's a good question there. So yeah, like personally speaking, like I said, I think that's quite a lot. I think there's a lot of room for consolidation. Honestly, even if you didn't have any ETFs and just had 61 holdings, I would look at that and still say, there's probably some room to consolidate. And I think think about it like cleaning out your closet. It always feels so good to get rid of pants you don't wear, get rid of, socks with holes in them. It just feels good to just clear things out. You don't feel as heavy. You don't feel as bogged down. And I think if you were to do so in your portfolio, I think you'd end up with a more streamlined portfolio with holdings that you probably have a higher degree of conviction in. And maybe you're not at that stage yet where you can determine what those holdings are, but if you're not, you'll get there. So don't worry about it too much. And don't feel like you're doing anything wrong because you're not. Like the important thing is that you're investing. But you'll find your groove. You'll find your groove as time goes on. And once again, if that works for you, then that works for you. Then just take what I say with a grain of salt. You should do that anyway. Let's keep going. Mike here says, this is a good question. So you mentioned selling Verizon, but you love SCHD. Verizon is the number 2 holding in SCHD by weight. So why are you selling? Well, maybe I want less exposure to Verizon. I can't control. I think holistically, I think SCHD is a really good fund. But having said that, there are individual positions in SCHD that I wouldn't want to own individually. Ford is another good example of that. Just because Ford is an SCHD doesn't mean I have to think that highly of it. And, like once again, I can't control the holdings that are in SCHD, but I do know when you take that fund and look at it as a whole, it's done pretty well. And I'm not going to throw the baby out with the bathwater with SCHD, but I do know on an individual level, I don't want to have Verizon in my portfolio anymore. And that's something that is within my control. So I can only control what I can. So hopefully that makes sense. That was a really good question. I hear Peanut out there. Let's keep going here. Yeah, B still says, Ryan is not walking to 50K subs. He's sprinting. Keep up the good work. One of my favorite channels to watch. Well, thank you, man. That really means a lot. I really appreciate all the support. It's going to be a walk to 50K subs for sure. I mean, we'll be at 40K by the end of the year, no doubt. Hopefully by the end of the month. But I don't know. It's been kind of slow growth lately on the channel. I'm not going to lie, which is okay. But yeah, we'll get there eventually. I'm not stressing about it. Just going to keep doing what I'm doing, keep doing my thing. And I know the rest will work out. So let's see. Let's keep going. Let's see. Okay, this is a good question. So Cyclone says, what's your favorite brokerage? Any familiarity with Quest Trade? No, I'm not familiar with Quest Trade, but I got to say, so I used both Charles Schwab and M1 Finance, and I'm really happy using both of them. But I also got to say, I used to use Robinhood back in the day. Excuse me. And I really do enjoy using Robinhood. I really think it's such a Such a user-friendly platform. It's super clean. Um, there's just a lot to like about Robinhood. So I would say that's if I wasn't using Schwab, if I wasn't using M1, and if for some reason I had to go to a different brokerage, I'd consider going back to Robinhood because I think it's great. But also I've heard other really good things about Fidelity, which is another one of those legacy brokerages, kind of like Charles Schwab. So there's quite a handful of great brokerages out there for sure. But yeah, I'm happy using Charles Schwab. I'm happy using M1 Finance. This is a good question. So what matters the most for you, dividend payments or total return, considering the same amount of capital and time frame? I don't know. I think both are pretty important. I think, I think if you're investing, I think what's important is I hope this doesn't sound like a cop-out answer, but I think what's important is just trying to invest in the best businesses that you can, the ones with the best long-term prospects that you think are going to be around and better. I keep saying this, but 10 years from now, 20 years from now than they are today. And I think if you can find those, I think you will get an increased amount of dividend payments. Okay, that's certainly something that's important to me. And I think you'll see pretty solid total returns as well. But I don't think you can experience either of those things if you don't first find a quality growing business. So hopefully that makes sense. I want to, I guess with that said, like it's all important. I want all of it. And I don't want to label one as being more important than the other, because I think in a lot of ways they go hand in hand. At least I want them to. And so, yeah, I want it all. Let's see. Let's keep going. Chip stocks are cyclical. Yeah, they are. But I don't know what we were talking about with that. Let's see. Let's go back up here. I'm all caught up in the chat here. Mike Diamond busting balls about Verizon. Good for you. I don't think he was busting balls. It was a good question. Let's see here. Fawad, I broke past $100 a month for my dividends on Robinhood. Good job. That's a huge milestone. Miguel says, I have 61 holdings and I'm good with that too. When the moment is right at this point, I only plan to sell 3 of them now. Right on. Let's see what else we got here. We got just a few minutes left in the stream tonight, my friends, and we are going to wrap it up. Intel is about to release the new AI chips. Yeah, with Intel, I got to say, I've been very, very pleased with what they've done so far with this turnaround. But I'm looking forward to moving on. And there might, with that said, new AI chips, new fabs, more manufacturing. I might potentially miss out on some gains with it down the road, maybe, but I don't know. I think I've got some other really good businesses in my portfolio, so I think I'll still, I think I'll be okay. I'm not that worried about that. It's not like if I sell out of Intel, it's not like I'd sell out of Intel, then all my, my portfolio wouldn't go anywhere. So, just go into positions, dividend view. What are you doing, buddy? Peanut is a wild man. Yeah, I know. This is the thing too about the camera situation. It's like we won't even be able to see Peanut in the background. So I'll just have to let you guys know when he's here. He is here. And where did he go? I think he's got one of his favorite toys is a Q-tip. He loves Q-tips. So you just give that guy a Q-tip and he'll be busy all day. So let's see what else we can come up with here. I think I told you guys, I didn't show you, but I told you my portfolio right now is sitting at all-time highs. I'll show you what that looks like real quick. It's pretty cool. So I remember, like just a couple weeks ago, when I started doing the Walk to 100 series at the beginning of November, my portfolio was just over $51,000, like $51,600. And just in the last 2 weeks and some change, it's already up, an extra $4,000, $4,200 from there. And it's just been such a wild month in November. I mean, I'm really curious to see where things go from here, because with a rapid gain like this, I would not, for whatever reason, I would not be surprised if things headed south. And we'll see what happens. We shall see what happens. But what else we got? I see El Dynamico says, make sure you promote the book. Okay, so yeah, I actually did want to talk to you guys about that. So nah, I won't go get it. I was gonna go get the book. So I don't know if I told you guys. Well, I told some of you guys, but I've been reading that Warren Buffett biography, The Snowball. I highly recommend you check it out. It's I'll pull it up on Amazon real quick so you guys can see the cover. Really, really solid book. Let me go. Oops. Not American Motorcyclists Association. So The Snowball, Warren Buffett in the Business of Life by Alice Schroeder. This book right here. I just finished it. And I got to tell you guys, it is one of the best books I've read in a long time. It's one of those books that you just don't want to put down. You just want to keep reading it. And I don't get that way with a lot of different books. And so with that said, anyone who's into reading at all or into investing, I think that's kind of like I think that's a must read. In fact, I think you should read that before you read The Intelligent Investor, especially if you're someone who's just getting into investing. But anyway, yeah, I just finished that. I know El Dynamico told me earlier today that he downloaded the audiobook and he's listening to that. I know Russ is reading that book right now. We were texting about it and he's really liking it as well. So I think a lot of you guys would enjoy reading that book. It's kind of a whopper though. It's about 700 pages, but once again, it's one of those, it doesn't feel like 700 pages. It's one of those you won't want to put down. And so I think you guys would really enjoy it. B still says, Ryan, I forgot what you said about the Patreon, why that went away. Can you explain, please? Yeah, absolutely. So I started the Patreon back in like April or May of this year, and I ended up not like shutting it down back in August. And for those of you who missed all of that, who never were part of it, was basically just like an extra hour of the stream after this. So it was the Dividend Happy Hour after party every single week. There were a couple other things that went along with that too, but that was the gist of it. And it just didn't scale. Like it just, people weren't that interested in it. I had some regulars from here that would hop over there and show support, which meant the world to me. But at the end of the day, it just wasn't something that was it was a lot of work to put together. And it wasn't something that, like I said, I felt was going to scale. So it just, after a few months of doing it, it had already stagnated. And that's because the offering wasn't very good. So it turned out to not be something that a lot of people were interested in, which is fine. Like you try things out and it doesn't work. I've got all these ideas of different things that I want to try. Some are going to be really good, some are not. And so anyway, I just looked at it and decided the juice wasn't worth the squeeze and decided to not do it anymore. But I really like the idea of having some sort of community like that. The Patreon was super fun. It was a group of really good people. And so at some point I would like to bring something like that back. Maybe not a Patreon, but some sort of membership community with better offerings. That would have to be the case. And I have some really good ideas of what that could look like. And I've kind of started mapping it out already. And at some point I'd love to bring something like that back, but I'm just not ready to. I'm working on other things right now. I'm still trying to finalize my dividend database. I want to get that out to you guys. I have some ideas for another spreadsheet version and version 7.0. So, I just got some other things that I'm working on, but I really like having a community like that. And at some point I'd like to try it again, just do it in a different way than I did the first time. Hopefully that all made sense. Micah, this is a good question. We're going to do one or two more questions. We're going to wrap it up. Okay. So I'm joining the military and starting my dividend portfolio after basic training. What should my portfolio balance be? Honestly, I don't know how much experience you have with this stuff. I'm guessing you're just started your dividend portfolio. So you're just kind of getting going. I would not recommend, but I think it would make the most sense to just go with ETFs. Just rock with some VU and some SCHD or some VTI and SCHD, something like that. I think that's going to be the easiest way to stay on top of all that and set it up in a way that it's going to, it can automatically invest for you. Just get yourself set up with something automated so you don't have to worry about it too much, especially at basics. I don't think, well, after basic, you said you're starting, but there may be times where you don't have access to the computer or internet, depending on where you're at and what you're doing. So, like I said, I would just do something hands-free, something that can kind of grow in the background of your life as you do your military thing. So, I would just rock with a couple ETFs. I'm sure some of the community members here in the stream can give you some good examples. And Adon right here says, you probably won't have a lot of time. Yeah, ETFs. Professor G has videos about a 3-fund portfolio, and he uses SCHD, SCHG, and VU. So yeah, I think that's a really solid combo. But yeah, that's a good question. Let's see. Yeah, same response. Yeah. Let's see. Yeah, hit up Coach Tim. Join the Discord group too. Yeah, definitely join the Discord group because I know there's a few veterans in the Discord, and they can certainly point in. There's a couple of veterans, few veterans, and actually a couple active duty people, I think. And so they can definitely point you in the right direction. And that goes for all you guys. I hope you join the Discord group. Right now, there are over 2,600 members in the group, and it's free to join. You can do so using the link in the description of the video. I hope you guys do. If you join the Discord group right now, shoot me a message or send a message in like the general chat or something like that, and tag me and say what's up so I know you're in there. And yeah, I think you'd really enjoy it. It's a really solid community of investors, and everyone's there to help each other grow and help each other get better. And you know, everyone's coming together over a shared love of this craft that we do. So, but anyway, guys, I think this is a really good place to wrap it up. 6:06. So we've gone a few extra minutes tonight. But I want to thank you guys so much for tuning in tonight. I thank you once again so much for the putting up with the technical difficulties. I'm so sorry. I know it doesn't matter to you guys as much as it does to me, but I'm so sorry this camera thing is having issues. I don't know I don't know how to resolve it at this point, but if they can put a man on the moon, then hopefully I can figure this out. And I know one of you guys is going to say, "Oh, the moon fake." Yeah, okay. It's just a phrase, just a phrase. So, but anyway, guys, yeah, once again, thank you so much. As far as Sunday's video, it might be late. I might end up having to put out Sunday's video on Monday. So I don't quite know yet. I'll let you guys know. I'll put a community post out about it, but we'll see what happens. But otherwise, I hope you guys have a fantastic weekend. Okay, Charles says drivers for the camera update. I'll look into that. But anyway, I hope you guys have a fantastic weekend. Thank you so much for tuning in. Keep up the good work. Proud of all you guys. And I'll see you in the next one.